even more secure. So that means the euro, and we're going to see charts that shows the euro was already going up and it's likely to keep going up, which means the dollar is likely to keep going down. So keep that in mind. Meanwhile, back in the U.S., we withdrew from the Paris Climate Agreement. Trump did this. You would think this would be incredibly negative for solar stocks or wind stocks or alternative energy stocks. They actually are doing quite well. So we will see the chart, which makes no sense. They should be crashing. So meanwhile, does Trump get any legislation done? David mentioned the tax bill. This is absolutely key. The market has gone up anticipating this bill is going to pass and lower taxes for businesses a great deal. Now if that gets screwed up and it doesn't happen, the market is not going to like it, and David said that. So, and I'm repeating it, because once the market discovers this, it could easily have a big drop. I mean, the whole Trump rally could be lost very quickly if that happens. Meanwhile, before that, the Trump care bill is like the alternative Obamacare. It managed to finally pass the House by 3 votes, and it's likely to die from complications in the Senate. The Senate has to pass the bill. It says it's going to write its own bill, and then if it does that, then the 2 houses have to get together and create a modified bill, and then it has to pass both houses. So this is like a short lifetime it's going to take for this to pass, if it ever does. And at any point in that process, it could falter and disappear. So this was a disaster. I see no reason to believe that the tax bill is going to pass. Maybe something will pass. Nothing like what is proposed is going to pass. And it might be very weak and watered down and not exciting. And the markets aren't going to like that either. They want most of what was promised. And meanwhile, before that, there was a budget interim bill. Trump got nothing that he wanted in that, and that's the funding to September. And there's got to be the entire funding for 2018 has to be passed in September, because the fiscal year begins October 1st, not January 1st. So, and Trump's not likely to get a lot of what he wants there either. So, all of these things are going to add up to hey, we're not getting anything, and the market is not going to like that. So, meanwhile, there's all these hearings. The market doesn't like this either. With the Russia, Comey, these are not going to go anywhere. Don't get excited. All this excitement in the press. There is no case here. It's ultimately going to just blow up and disappear. And I actually heard the hearings and then read the articles, the headlines, and I said, what were they watching? I didn't hear any of these things. I heard totally different things in the hearing. So the newspapers just seem to write whatever they want to write, regardless of reality. So, but this controversy, whatever you put, is going to continue. It's going to continue. And we actually said this before the election. No matter who wins, there's going to be this constant controversy that goes on and on and on and on. And this is happening. It's going to continue to happen, so we have to continue to watch. Now, meanwhile, the Fed, as David said, the Fed raised rates yesterday, and then our Fed funds rates are now 1% to 1.25, which is nothing. I mean, this is ludicrously low. So this is not enough to, usually rising Fed funds would be very bad for the market, but the rates are so low, they can rise quite a bit before it really negatively impacts the market. Meanwhile, the economy is not in good shape. I mean, you won't hear this in the papers or read it in the papers. But retail sales in May, that they just came out a day or 2 ago, were the worst in 16 months. Retail sales are the biggest part of the GDP, the biggest part of the economy. So if they're bad, that can mean all of GDP is bad. And this indicates Q2, which is the quarter we're in right now, could actually have very bad GDP. And David showed you the chart of the estimates going down and down and down and down. Well, they can go down and down and down a lot more based on this figure. So, and last time, 2 months ago, the chart, we said the exact same thing, that the retail sales were weak. And that was 2 months earlier, and this is going to be bad for Q1 before Q1 was out. And Q1 was revised up to 1.2%. 3% is a good GDP or higher. It was never 3% during Obama in any quarter. 1.2 is pathetic. This is a very poor GDP growth. It's very weak, non-existent, not much is happening. Meanwhile, the May jobs figures were 138,000. They were even worse the month before. This is also not a good jobs figure. So jobs are not good, retail sales are not good, GDP is not going to be good. So meanwhile, so the economy is weakening. The economy is quite weak. And could there be a recession at any time? Yeah, David is right. It could just suddenly appear in the next 3 months, 6 months. There's all of these warnings that things are not really great. So meanwhile, the U.S. stock indices, all the 4 major indices have been hitting all-time highs based on bad economic data, which has been going on for years at this point. So this is like inconsistent with like economic reality, which means another reason why it should reverse and the market should start going down. And as we said last time, the U.S. dollar peaked at the beginning of 2017. We're going to see the charts again. And it's lost the entire Trump rally. The big rally after Trump was elected, it's now lost that entire rally. And we're going to see that. So the stock market might follow that pattern. So interest rates peaked temporarily globally February, March. They also bottomed last July globally. They made a major bottom. Could they go back and test that bottom, which David was talking about? Yeah, they could. So we haven't seen this yet. This is many months in the future. So your charts indicate that, right?
This potential,
Yes. Well, this indicates it could happen too. So David and I do totally different types of analysis. So we come to the same conclusion. That's like it's much more potent. Oh, that guy's yawning. He couldn't care less. Is that a conclusion? He's come here for years, so you're bored. Right, you're bored too? Okay. That's why you sit up. So you can't fall asleep. So like almost all assets are not just overpriced. They're in a bubble. There's bubbles all over the place. Not just Bitcoin's a severe example. Bonds were in a mega bubble globally. Now, the United States was not so bad compared to Europe or Japan and some other countries. So the only thing that's cheap is commodities. So, and Bitcoin, David already spoke about that. Just because commodities are cheap doesn't mean they're going up next week, though, or next month. They can stay low, and someone asked David this week, they can stay low for months or years. Which means you don't make any money, you got them at a good price, but you're not making a profit. And the market can be toppy for months or years also. It doesn't mean it's going to continue to go up, it just can go sideways, so you don't make any money that way either. So like the answer, like get cash and wait is the good answer. Okay, let's look at the charts. This is the Dow, it's hitting new highs. Now what we look at in these charts is these 3 colored lines here, red, blue, yellow. You want red on the bottom, blue in the middle, and yellow on top. That is a positive pattern, it's a bullish pattern. So this is a nice bullish pattern. The problem with this, though, is you don't want the yellow line to be too separated from the other two. If it gets too high, it has to come back down, and means the market's overpriced with the assets overpriced. The Dow is overpriced based on this. Plus, this is the RSI. It should never go above 80. It's gone above 80 twice. In fact, in the 90s, I don't remember it ever going above 80 on the Dow, ever. And this is the last year, it's happened twice in the Dow. So this is a very bubble type behavior. This is like a really overdone market. But meanwhile, we see new highs. We see this is getting weaker, the MACD. We see the peaks in the DMI, this is the trend indicator, are getting weaker. We see this is like a potential buy signal that's trying to take place, but it's sort of indecisive. It's not really happening. The S&P looks similar, except this is worse. This is a trend line. The trend, the black line is the trend. It's actually falling out between those two, which indicates it's not in a buy signal. And we see that yellow line is too separated from the blue line, which means the price needs to come down. We see this RSI is deteriorating. That means the underpinnings of the market are deteriorating, even though the price keeps going up. It's like you have a building and the columns are rotting that are holding it up. So once they completely rot, everything falls down. But you keep building the building higher and higher and higher. So when it falls down, it gets worse and worse. So NASDAQ is the really interesting thing to watch. Last Friday, it suddenly went down like 180 points in like 2 hours. That's a massive, massive drop. It's because all those FANG which is like Facebook, Apple, Amazon, that's 2 A's instead of 1, Netflix, and Google all dropped at once. They all had big drops. And then a few other of the popular NASDAQ tech stocks. And like the floor just fell out instantly with like nothing really happening. And then it recovered, so it only closed down 113 points. Meanwhile, the Dow closed up 68 points. That makes no sense at all. All the markets should go down together or they should all go up together. So like the underpinnings of NASDAQ are falling apart. NASDAQ is really bubblicious, more than the Dow or the S&P. And we see that that yellow line is way separated. Now we see in this RSI here, we got over 80, but like we're going higher, but each peak is getting lower. So this is like a double negative divergence. That's very negative. Now it can become triple or quadruple. You know, I've even seen quadruple in really bad cases. And we see the trend line here is falling out of both of them. This is actually would be a sell signal. It's like falling out. There's no indication of an uptrend that's taking place now, even though the price is still going up, although it started to go down. So this is really suspicious behavior last Friday. And markets fall apart, they give you warnings. The warnings in 2008 actually started at least in late December 2006. But the price in the market started falling probably around around July. Now the big disaster came in 2008. You started to see like things fall apart a year earlier than that. So we're starting to see things fall apart now. So like, this could be like the really big collapse comes in a year or two from now. And that's a really big collapse, not a 10% collapse. So watch NASDAQ very carefully. The Russell, which is small caps, has also been hitting new highs. But we have this even longer term decline in the RSI, where it's getting weaker and weaker and weaker. And the trend line, that black line, is scraping along the bottom. That does not indicate an uptrend exists at all. It indicates a trendless market. So this is like not an enthusiastic, you wouldn't run and buy the Russell and say, oh, look how exciting this is. This indicates nothing's holding it up. It's just going to go sideways at best. So that's U.S. stocks. Let's look at England. FTSE is a British stock market. This is a nice looking uptrend, but we see in that RSI it's getting weaker, 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 which is very bad news. We see the MACD here in the center is getting weaker, and this is a buy signal, but it's not really going up. It's sort of going sideways, the trend line. So this is like, it's not too exciting. Now we also mentioned in previous meetings that the pound has dropped, and that's what's causing the FTSE to go up. When you invest in a foreign market, you have to take into account the change in the stock price and the change in the currency. And the pound has gone down almost the equivalent amount of the stocks going up, so it winds up zero in the end. So if you're a dollar holder, you're not making any money investing in the FTSE. Although it looks like, whoa, look at this great rally that's taking place. What you want to see if you invest in a foreign, you want to see the currency going up and the stock price going up. Remember that. So here's the DAX. The DAX actually looks a lot like the NASDAQ in many ways. We see this RSI is like declining, even though the price is going to be. And these arrows point to gaps. Gaps have to be filled. And the markets in general are very gappy. They didn't used to be. Gappiness is a bad sign. And a gap is a hole in the market when no trading took place. So the price wants to go back down to that level and trade at that level, or up, depending on where the market's price is. So the DAX will want to go down to like just under 11,000 to fill that bottom gap at some point. So, and that could happen in the next few months. And it would be a global. The drop David's talking about, it can be global. It wouldn't just be in the US. So the Nikkei is at 20,000. I mention this every time. It peaked in 1989, before that man was born over there. That's like an entire lifetime of some people. It has been in a downturn.
Which man?
So, what?
Which one?
It's like he's hiding. You can't see him, but he's there. So it's been in a downturn for 27 years. And the peak was close to 40,000, it's now 20,000. So it's half of what it was 27 years ago. So if you invested, say, I'm a young man, I'm going to go a young woman. We don't care what sex you're in. And I'm going to invest for a long term for retirement. I'm going to buy the Nikkei. You've been working 27 years. You now have half the money you invested, and that's your retirement. So maybe you work another 27 years, or you're better. Hopefully it'll go up and you'll at least get your money back. But you made no money, and you lost half your money after 27 years. So stocks may eventually go up, but you may not live to that point when they do. So then this is proof things don't always return to their value. And this is decaying. In the short term, this is decaying. This trend line is flat, which means it's like not really a buy signal. It's like this is gonna fall apart. So. Okay, emerging markets. These are the four biggies. Brazil. The two best markets to invest in are Brazil and Russia usually. Not only when there's a collapse. After the collapse. Now, Brazil seems to have had a double top. It's getting, had a huge rally. It's getting weaker. The RSI is not painted here, but like it's going down. We have that same downtrend. It's going down here. This is actually a sell signal that's getting quite strong. So if it falls below that red line, you don't want to trade below that red line. That's negative and that's bearish. Once you get there and stay there, you're in a bear market regardless of what drop took place. So Shanghai, China had its bubble. It peaked in 2007, right?
Oh yeah,
seven.
yeah,
I think seven. Because I remember I accidentally asked Bernie Madoff about that. I said, "What's going to happen when this?" It's true. I was at a meeting that he was talking at. I said, "What's going to happen?" And he looked like really nervous. And weeks later, he turned himself in and was arrested. But he had this sort of deer in the headlights look. I said, "What is that such a controversy?" And it actually was on video too. So see, we've lived an interesting life in this video. So this is nowhere near the high. Was 6,000, right? 2007. So that's 10 years. This is 10 years. It's been in a bear market. It's around half of what it was 10 years ago, which is not as bad as 27 years ago, like the Japanese market. And China has a future. Japan does not have a future. So it's like completely dead, and we could discuss this in great detail why. So China's weak. David said it hasn't fulfilled the bubble hasn't resolved its bubble yet. And it's likely to just thump along for quite some time. And so this was a sell signal that got very strong. So there's a lot of negativity in this chart, a lot of weakness. So don't get too excited about China. India is probably in a bubble. It's like this going up and up and up. We see like some temporary weakness here. There's weakness here too. There's this gap here that I didn't point to. There's also a mega gap on the Indian charts from years and years ago, maybe around 10 years ago, sometime in the 2000s. And there was a big jump up, and that gap has never been filled. One day that gap will be filled, like in the next disaster. Russia, if there's a disaster and everything falls apart, Russia's the best market to buy at the bottom of that disaster. Not before, because you'll lose most of your money. So this market is getting very weak already. Now Russia is very tied to oil, and it's the biggest commodity producer in the world. So it's very tied to the commodity markets in general. It's tied to the oil market. It's not a huge manufacturer. So this is like, notice the price fell below that red line. I said like, you don't want the price to go below the red line and stay there. Now it's only fallen there for one day so far, so it has to stay there for like a few weeks. And it might, that'll be a bear market. And the RSI is below 50, that's weakness. The MACD is below 0, that's weakness. And this is a sell signal because the red line's above the blue and the black line is rising, which indicates negativity. So this is possibly bad for the oil market. The dollar has falling apart. This green line, which I drew on the chart, is the Trump rally. Started here, went up there, and we have now fallen back to that point. So all of that value was lost. And this may be a message, an augur, that the stock market's going to behave the same way. And you notice the RSI is below 50, which is weak. The MACD is below 0, which is weak. And there's a sell signal with red lines above the blue line with the black line rising. That's a strong, powerful sell signal in the dollar. So you would not run out and buy the dollar right at this second. You also see the price is going below that red line, and it's staying below that red line. That is bearish, and if it continues to stay there, it's very bearish. Meanwhile, the euro tends to move opposite of the dollar. So when you hear, oh, this is good news for the euro, what should happen in your mind, this is bad news for the dollar. So you notice the euro is going up. Now it was, instead of rallying after the election, this is after the US election, it had a big sell-off. And now it's going back up, and it's gotten rid of that entire sell-off, just as the dollar got rid of its entire rally. So everything has been inverted. And notice the price is above the red line, and is staying there, that's bullish. So just as below the red line is bearish and bad news, above is bullish and good news. So the euro is getting more positive, the dollar is getting more negative. So and this looks like it's going to continue. We'll have to check it. This is a very strong buy signal in this bottom thing in this BMI. And the RSI is above 50, which is bullish. The MACD is above 0, which is bullish. So this chart, and you see that gold line went above the blue line, which is good. And it's not good enough, though. The gold line has to go above the red line. So it looks like it's heading there, and it's going to get there pretty soon. And then you want to see the blue line cross the red line, too. But that will be the final tip-off, the gold line crossing the red line, staying above it. Then you can safely buy the euro. This is the British pound. This gets a lot of, we didn't used to cover it that much. This was the Brexit vote. The pound collapsed overnight. Now I wrote 3 articles saying Brexit was going to pass. I had trouble getting the last one published because everyone knew it was going to pass, but I was right. And there were people caught on the long side of the pound. Foreign FX traders there got wiped out. They lost their business. They lost all their money because they were so convinced Brexit was going to fail. So there were people that lost a fortune based on popular knowledge. So be very careful with popular knowledge. It can kill you. Now, in the last election, that's this area right here. Notice nothing happened. There's this little gap, but the pound went down, but it's already about as low as it can get. So nothing terrible happened. And if Brexit got reversed, it would be happy, so it would go up a lot more. But you see here, is the RSI is really declining. That's very negative. That means there can be a drop. And there was a failure for a sell signal on the bottom of that chart. This chart has gotten weak. Whether it stays weak remains to be seen. Okay. The Swiss franc is now moving with the euro. It has for the last several years. That didn't used to be the case. The Swiss franc is actually worth something. The euro is not. So if you want to buy some euro, buy the Swiss franc, never buy the euro. And this is getting stronger. It's getting back toward 100. It bottomed around 92. It would have been a great buy at that point. The bottom of that chart's a decent buy signal. The MACD and the RSI are relatively bullish. And you see the gold line's crossing that blue line. It needs to cross that red line also. And then things will be much better. The Japanese yen is falling apart. There are 2 sell signals, those arrows. And it was very strong. It sold off after the election, just like the euro did. And it's not gotten all the way back up like the euro has or the Swiss franc has. So, and this is it's not so much negative, it's more like sideways looking at what the technicals are telling us. So this looks like it's not going anywhere soon in the near future. The Australian dollar has been obviously going up and down, up and down. This tends to trade with gold, so keep that in mind. And the most interesting thing about this chart is the very last day. That's yesterday, and that's when the Fed announcement came out. So you want to look at it. You can look at every chart here. You can look at what happened yesterday. Now this reacted extremely positively to the Fed news. This is a big jump up. So people liked whatever the Fed said, and it says it's going to reduce its balance sheet, which will be bad for the markets. But the Australian dollar liked that. Now that means gold should have liked it too, but I don't think gold actually went up. We'll see them there. This chart is like trying to get bullish. It's like it's not doesn't have any trend down here. It's around 0 and 50 there. But it's very interesting how it reacted to the Fed announcement. And along with the Swiss franc, the Australian dollar is one of the currencies you would like to own. Oil has been actually going up and down like a yo-yo. It is extremely undervalued as far as I'm concerned. This is some place where you will be able to make a lot of money, but not necessarily this week. You may have to wait several weeks, or even a few months, and you will make the money on oil stocks, not on the oil the commodity. And it's very strange things are happening in the market. When the futures expired, I think it was last week, they couldn't close. There was some technical glitch in the market that prevented the closing of the futures. Now that's a very serious problem. It indicates the market's not trading. Something is really wrong with how it's trading, with how things are going. And it tends to have these big, if you notice, look at the volatility. This goes up and down, up and down, up and down very rapidly. So something is screwy is happening, and maybe one day there'll be an investigation. I'll find out what it is. But oil is very cheap right now compared to the fundamentals. It might get even cheaper, but you'll get your biggest bang in oil stocks more than even oil itself. So we watch this all the time, and oil is seasonally strong at this period. So it should be like move back up in the summer. We'll find out what happens. But once this gold line falls below this red line, you don't buy anything. That's a bearish signal. Just like you can buy if it rises above the red line, you shouldn't buy if it falls below that red line. You should just sit back and wait and keep your cash ready. Natural gas is a very weak seasonal point right now, so you wouldn't want to buy it anyway. It's stronger in the fall. So it's also having these great up and down movements. And this is not something you'd be interested in until maybe August or September or thereabouts. And then the fall is where you would make your money. Now this is PPW is alternative energy. Notice this chart's going up. And this gold line went above this red line. And the RSI is above 50, which is bullish, the MACD is above 0. And this is actually a buy signal down here. So Trump leaving the Paris Accord, which would be really negative for this asset, didn't have any effect on it at all. It looks like it wants to go up and will continue to go up. So this is sort of eyebrow raising why this happened. Uranium has been dead for years, and we constantly watch it. One day you'll make a fortune on it, but probably not today. So we keep looking. It's very, very cheap. One day it has to go back up. The chart's trying to get a little more positive. It's somewhat negative, but it's trying to get positive. So we'll see what happens next month, 2 months ago. The uranium stocks had a huge run. They went from 11 to 19. They almost doubled. Then they lost that entire round. So in that chart with that gold line falling below the red line, it's turned negative. So you just wait with this too now. Should have gotten out a while ago. Gold is above that red line, which is good. Gold also, notice the very last bar in the chart, that's the Fed announcement. It went up too, just like the Australian dollar. So that was considered positive, gold positive, Australian dollar positive. And it should be euro positive too. Euro and gold and the Australian dollar should be moving in the same direction. So, but if you look at the rest of the chart, it's very neutral. So gold is just hanging out there, wanting to go sideways at the moment. Gold mine is one of the best investments last year. They've been dead in the water this year, so they may have to go sideways for quite a while longer. Silver is dead. Silver was as cheap as $9, $8.88 in the bottom of the credit crisis. We recommended buying it at that point. It went to $50, went to $48 actually. It will go back to $48 at some point. But as David said, it can go sideways for quite a long time. So you don't have to rush out and buy it this week. You might go buy it next year or even the year after that. So, and this is sort of like a dead in the water chart too. Platinum is not going anywhere in particular. It's like the most bearish of the 4 precious metals. Palladium, however, is the most bullish which is unusual of the 4 precious metals. And notice it keeps going up. It has a nice uptrend. And it has this gold line above the blue line above the red line nicely spaced out. So why this is happening, I have no idea.